What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. Today's video, we will be covering the overall market. We will also cover the SoFi stock. And today was an absolutely insane day with the Nasdaq down 4.8% at one point. Be sure to smash the like button on this video so more and more people can see this video for the YouTube algorithm. And don't forget to drop a comment. I'll be commenting back to as many people as I can. And guys, we had a lot of pain inside of the market, so we are gonna take a nice shot of some New Amsterdam. I drink this, guys, because it is the cheapest vodka. I can literally find that taste halfway decent. This is lemon, and we're just going to do a nice little shot right here just to knock off some of that stock market disaster selling, a little bit of the edge. Whoo! Got a little bit to drink later. Jack Daniels. We also got some Kentucky whiskey. We're going to be celebrating later. Just celebrate something regardless of the stock market. So, guys, yesterday I could not do a video on the fireside chat with Morgan Stanley. And the reason why was because I literally got overheated working outside in Florida. It was literally 107 degrees. I lost over 7 pounds. And I literally started seeing gray while I was working, guys. And I literally was drinking water. I drank over a gallon. It did not matter. The humidity was insane. I was working outside doing pressure washing. And guys, I literally was stumbling towards the end of the day. And I came home and I could not film a video at all. I couldn't even open my eyes. My body was so sore. So right now there's some type of heat wave going on in Tampa, Florida. I'm sure other parts of Florida. It's absolutely insane. So that's why I didn't cover that fireside chat. Most likely I will cover it in another video. And if you find any of this information useful, be sure to subscribe to the channel. We will be keeping you updated daily. Let's get into the video. All right, guys, we can see S&P 500, Dow, and Nasdaq drop on recession fear and mortgage rates rising. So guys, a lot of analysts have already been saying we're inside of a recession right now. Mortgage rates, I believe, topped 6 to 7%, depending on what your credit score is. Companies are laying off employees by the masses, especially those stocks with the Bitcoin correlation, because the Bitcoin trading is, at super low volume. So, guys, it is the time to be a well-diversified business. And yes, I think SoFi is a well-diversified business with high-quality customers with 740 plus, FICO scores. So I really think SoFi will be doing strong during these next couple of months. Sure, the stock may not perform, but I know my money is not going anywhere inside of SoFi, not going to become a bankrupt company or, laying off employees by 20-30%. That's not going to be happening, okay? SoFi is going to continue to grow and be stronger once we come out of this nasty correction. Stocks tumble after Fed takes historic action on inflation. We got the 75 basis points. The first hike was a 25. The second one was a 50. The third one is a 75. And there's a possibility the next rate hike is either going to be a 50 or a 75. I can't remember the neutral rate that the Fed wants to get to. I think it's like a 3.5 or a 3.7. So 2 more 75-point rate hikes, and we're basically there already. So, guys, they are moving pretty quick after that 75. Once again, I told you guys I have some multi-millionaire friends. This is not a joke. I have 2 multi-millionaire friends at LA Fitness, and these guys own Apple. They own dividend stocks like what is it called? Give me a second. Philip Morris he owns. He gets like a 5% dividend. So these guys have been saying the Fed needs to start hiking these rates faster. And that's just millionaire advice. That's what they want to see. They don't want to see the Fed hike up 25, 25, 25. They want to just get this Band-Aid ripped off and get this, rate hikes moving. So that's just some millionaire advice, not coming from me. And there was some people commenting saying, oh, I got millionaire friends too, like Warren Buffett. Guys, these are legit multi-millionaires, 50 and 60 years old. So that's just something to take into consideration. They're liking what they're seeing from the Fed as of now. They may have moved too late, but they're liking what they're seeing now. S&P 500, negative 3%. Dow, negative 2.5%. Nasdaq, 4%. This thing was down almost 5% at one point. Russell 2000, down 4.7%. The Russell 2000 was the first one to start correcting well over a year ago because so many SPACs and IPOs came to the market and, just all of these, just got absolutely hammered. SoFi got hammered today, down 7.9%, up a little bit in the after hours. SoFi's market cap right now is below book value. So we are in extreme cheap land right now. And understand, I mean, book value is pricing in virtually just like the equity assets. That's like no growth at all. And SoFi is one of the fastest growing technology stocks inside of the market right now. I mean, you got some of these mega caps putting up 3 to 4% growth, some negative growth, and SoFi is still busting out 50, 60, 70% quarters the last 2 quarters, and they're expecting another 50% quarter this quarter for earnings. So I think SoFi will do well inside of the company. They will continue to grow customer base. They will start to cut losses with their bank charter. It's just the stock, it's just the market is pulling everything down, and it just sucks. We can see here Anthony Noto bought pretty big today. These are his bigger buys. We've seen him make those $150,000 buys, but occasionally he'll make these 300,000 buys. I can tell you right now, over the past, let's say 6 months, he's definitely made anywhere from 15 to 20 buys. So you're talking millions and millions of dollars. So he increased his ownership by 2%, 53,000 units at 558. Now he's got 3.5 million units. So he's not the only one buying. I just did a video with the director. The director is also buying. I believe he bought 300,000 shares. So they're liking what they're seeing inside of SoFi. You can see other company CEOs. I wish I had the link. The Salesforce CEO, he's been selling $300,000 for the past like 3-4 months. This guy's cashing out $20-30 million every single day he's selling. And as you can see, the exact opposite is happening with the SoFi management team right now. So it's just different company leadership is making different actions in a bear market. So we have the S&P 500 right here. It got hammered. I mean, this thing is starting to move pretty quick, but let's look at that 1-year chart. I mean, this thing was really hard to break 20% down. You can see the S&P 500 is finally in bear market territory, 23%. So this thing is heading towards 25-30%. So this S&P 500 has been holding up a lot better than the Nasdaq. We can see the Nasdaq is down 4%. This thing can move quick on these red days, anywhere from 4 to 6%, because we got all that tech in there. Apple, Amazon, Facebook at the top of the list. That 1-year chart, guys, we are literally at 33.7% correction. So we hit over 34% today. I've been telling people I really expect at least a 40% correction on the Nasdaq at least. I mean, that'll bring us down to potentially, what is that, 10,200? That's going to be literally 10,200 will be lows from July 2020. That is literally 2 years ago if we correct another 6%, guys. We're going back 2 years, okay? And literally, before that, the Fed started lowering rates in the coronavirus correction, I mean, we weren't that much lower. We were at about 9,700, at the top of before the correction. So guys, I mean, some people are calling for massive corrections. I think a 40% correction is very reasonable, but there is just a lot of spec, investments still out there. Those crypto altcoins, those SPAC stocks with pre-revenues, IPOs with, 100x valuations. It's just a lot of that bubble has been deflated, but there still needs to be more deflated. The bubble needs to deflate more on some of those investments. And, we're not there yet because of what the Fed is doing. They're still hiking up rates. And, we're not there yet because inflation has not peaked, but maybe we can get inflation down in the next 2 to 3 months, because that 75, basis rate hike is pretty big. It's just, once again, there's different factors not allowing inflation to slow down. But the Fed did say they see the inflation down to about 5% by the end of the year, I believe, at the Fed meeting, 5.5%. That's good news. So we should be rolling over potentially, 2 to 3 months before the end of the year, because it's not just going to go from 8.5 to 5.5. It's going to be a couple continuous months to get down to that 5.5. So the rollover should be happening in the next, 2 to 3 CPI reports, hopefully. Take a look at mortgage rates, guys. This is insane. It says 7.1% on a 30-year fix. This is with a 720 credit score, okay? They're saying the interest rates are like 6 right now. That's if you got an 800 credit score. So even a 700 right now, you're getting hit at like almost 7%. This is insane. So you got to think, people that are buying houses right now are going to be getting screwed because they're technically buying at an all-time market high peak, mortgage rate at all-time high, and right now you're starting to see these houses starting to get dumped. You're seeing price cuts on housing. And I heard a couple of areas like the bigger cities are starting to see massive price cuts, and we haven't seen this in a long time. You can see here, this is the city I live in, Tampa, Florida. Once again, guys, I literally had like a heat stroke yesterday. Today it was actually 110 degrees. But take a look at this. If we scroll down, I want you to look at this. Homes with price drops, okay? So you can see since February, look at this. Since February, price drops are just accelerating. 35% on price drops. This is the highest since August 2021. So almost a year ago. So who's saying that these price drops can't go way higher? That's when you're going to see the peak in the housing market, and you're going to see that, that discount, okay, that correction. Maybe there's going to be a 20% correction, 10, 15, 30. Nobody knows, but prices are going to finally come down because this is the highest, acceleration we've seen in so long because interest rates were so low. But as you can see, guys, Tampa Bay accelerating in housing price drop. So people are trying to sell their houses as fast as possible in Tampa right now because they're getting concerned about losing value. So just something to think about. But I feel bad for people buying houses right now with 7% mortgage rates. So everybody's, gonna get screwed because the people that sell their houses, they're gonna have to move in to new housing, okay, or apartment, and those are gonna still be high. So it's really not a win-win unless you have multiple properties that you can just move into another property. If you are selling your house right now at a peak, you're still gonna have to technically buy another property at a peak. So hopefully you have to like time your move in and move into a new property maybe 6 months later after the correction, then you get your 20% discount. So it's going to be tough, okay? You got to find out what you're going to do if you decide to dump property right now at these levels like a lot of people are trying to do with these price cuts. All right, guys, we have massive option open interest, put open interest tomorrow because it's one of those quad witching days. And as you can see, that is exactly what's happening because look at this, guys. The call options for tomorrow for SoFi are 213,000. And look at the next 3 weeks, 26,000, 16,000, 7,000, basically nothing until another month out. So this is just one of those weeks where the options are absolutely insane. You can also look at Palantir. The exact same thing is happening. Look at this, guys. 568,000 calls on Palantir. 60,000, 13,000, 5,000, 6,000, nothing for literally 2 months on Palantir, guys, all the way up until July or August, okay? There's nothing. So this is an insane day for Palantir, 568,000 calls. You also have Neo, exact same thing happening, guys. This is quad witching. Look at this, 300,000 calls, then nothing. 50, 17, 7, 29, 4, 4, nothing for 2 months. So maybe we're going to get, a little bit of a rally after all these calls and puts expire tomorrow. But guys, this is insane option volume tomorrow. One of the highest I've seen in, multiple quad witching. So we need to get by this, and hopefully, that can make, some fresh buyers coming after all these calls and puts expire. So once again, guys, a lot of things are going on. I hope you enjoyed this video, but, we need to get our minds, off the stock market. You need to have a little bit of fun. If you're trying to make more money, you need to, start a side business, get more hours at your job, start working overtime. You can't control the stock market. That's what I don't like about the stock market. You are not in control. You're only in control if you have a super long-term horizon, 3 to 5 years. It is very hard to make money in a bear market, with the put and calls, expiration, absolutely insane. You just don't know what the media is going to say. I've seen some, day traders, they go up $1 million and then they get a little bit aggressive. And I've seen these guys lose 3, 4, 500,000 in literally a week trying to chase back their losses. So day trading is hard to sustain for, years at a time. I mean, if you look at the overall people that win in day trading, it's like less than 10% to make it a full-time career for, 10, 20 years. It is very difficult. It's easy to go up, but it's very, very, very easy to go back down extremely quick because emotions take a hold of you, and just the news can change the direction of your puts and calls that you buy the day before. The news can absolutely rip you to shreds in the pre-market. You don't know what the Fed's going to do. You get weird reactions. So understand, long-term investing is much safer than short-term day trading. I've seen 9 out of 10 day traders, people selling courses on YouTube, get blown out of the market. I've had my fair share of massive losses with calls. Over like 6 months ago is when it really got bad, when the market started correcting. I thought we were going to bounce back. So just understand, shares is the safest investment right now. Just dollar cost averaging once a month. That's what I've been preaching for a couple months now during this 8-month correction. So just understand, don't try to chase the market, guys. Try to take control of your life and generate more revenue in different directions. Working off of your strengths, because the stock market right now, nobody is in control. Once again, my name is Kyle. Hope you have a great day.